Right, everybody, ladies and gentlemen, hello and welcome here to us at Nadex. My name is Philip and I will be your presenter for today's webinar, just as usual, Market Movers. Today it's the 29th of August 2017. Again, just as usual, if you have any questions, please put those questions in the small questions box and I'll do my very best to answer those questions as we move through the webinar. Right now, I would appreciate a very short yes or why in that box to just let me know that both the audio and the screencast are working properly. I'm switching some slides here so that you guys can see the slides actually changing. Perfect. Thank you very much, everybody. Really appreciate the feedback. Yeah. Today's webinar is scheduled to run for about half an hour, and of course, before we get started, there are our usual risk disclaimers that I need to make you aware of. You already see this risk warning here on the screen, so please take a moment of your time to read through it carefully and make sure that you're comfortable with that risk warning. Essentially, this says that trading, of course, involves risk and that you should understand those risks and the risk associated with the instruments you're using before you are getting active in the market. As neither TradeWith Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only, especially true for the live part of today's webinar. We will be analyzing the markets together. I have brought to you a few markets which I think are interesting right now, but by all means, even if you get the vibe that I might be bullish or bearish in some markets, it's never a trade recommendation. I want to explain to you guys the way I'm looking at those charts. If and how you want to trade those markets, that's completely up to you. So it's never a trade recommendation, it's just for educational purpose. So please make sure you're okay with this before continuing with the webinar. That being said, here we have the risk warning from Nadex itself. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not indicative of future results. Nadex instruments include forex, stock indexes, commodity futures, and economic events. Nadex binary options and spreads can be volatile and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. That being said, let's just have a look at today's agenda. As I've said, we want to analyze the markets together. How am I approaching those markets? I'm looking for my setups, the setups that I use with my strategies. And I think you want to have a strategy when you're trading the markets. You want to do the same thing over and over again once you've realized that what you're doing is working more often than not. This than not is quite important because people always think if you're a professional trader, you only will have profitable trades on your hands. And that's just not the case. That's a very fundamental misconception. I do have losing trades, I can tell you. But the interesting or the important thing is that I have more profitable trades on my hands than losing trades, and that those potentially profitable trades are usually more profitable than the money that I lose on my losing trades. And those two things coming together, winning more often than losing, and if you have a profitable trade in your hand, that one should be bigger. Those two factors coming together, this is what should give you an edge in the market, which means at the end of the year, over a large sample set of trades, you should be able to come out ahead. Now, a strategy, you want to have and see those trades to be as repeatable and comparable as possible. And good part of the strategy, of course, is the proper setup and the entry. And for that reason, I would definitely want to jump right now directly to my screen, to my charts. And I want to kick it off today with gold. Now, I'm pretty sure everybody has heard the news. North Korea, more tension in Asia, and all the good things that go with it. And sure enough, at least here in Germany, by my accent, I'm pretty sure everybody was able to tell that I'm German. And yeah, newspapers this morning opened with due to North Korea and the missiles flying through the sky, gold shot up. Guess what? I've been trading the US session yesterday's evening, I've been trading the precious metals, and there was nothing in the news about missiles flying around there, and gold pretty much was already up by that time of the day. So always be wary when people try to explain certain things and try to pick the news and tell you have to realize and understand the news in order to be able to understand what the markets are doing. No, price reacts first. It doesn't matter how fast and how good your news feed is. By the moment you have the news on your screen, price already, I'm pretty sure price will already have moved. And so for my approach to trading, I think it's just crucial to have good charts, to understand what those charts are telling you, trying to anticipate news, trying to trade around news. If it's working for you, by all means, keep on doing it. But for me, that's not the type of game I'm playing. That's not the type of trading that I apply. And yeah, I just want to look at my charts. And let's get started with gold here. And I think the most interesting aspect of gold here right now is on the daily chart. Now I'm just trying to find a certain mixture between zooming in and zooming out to give you the big picture while making sure that you guys can see something. Obviously, gold has been here in a range-bound market for quite some time. And you can see going back to 2017, we have tested those highs here now 1 time, 2 times, a 3rd time. And yeah, pretty much yesterday we saw another test and then immediately broke out of that range. And again, this happened before the news was out. This happened before North Korea launched their missile. The market was strong, and sure enough, the behavior and the fundamental news and the not only risk, the general tension and uncertainty in the market pretty much drove people more to gold. And so we have broken out of this range. We are now once again here, at least on the daily chart, and let's zoom in here once more. On the daily chart, we are in an uptrend. How do I know it's an uptrend? I'm just comparing those most recent highs and those most recent lows. What I can see here is that the market has been making new higher highs and has been making new higher lows. This is what I want to see in an uptrend. Furthermore, I can see that my moving averages, the 10 period, 20, 50, and 200, they have started what we call a fanning pattern. They move upwards, they point in the same direction. And I only get this type of moving average movement here and setup if the trend is there and if the trend has been going on for quite some time. If we compare it with what the market has been doing here around the end of June, for example, you see those moving averages have been all over the place. It's not really clear what has been going on there. Here, however, price shoots higher and has been doing so for quite some time. And what I'm looking for now for our standardized setups is a pullback, because right now, if you can see where price is trading right now, it's quite far away from what we call our moving average buy zone, which is nothing but the area between the 10 and 20 period moving average. Note here, price is shooting higher and it's pulling back. Where does it pull back to? It pulls back to a moving average buy zone. Once again, price pushes higher and it pulls back into our moving average buy zone. And once again, and once again. And now we are what we call overextended. Price has moved quite a bit away from our moving average buy zone. And I think it's rather likely that price might be retracing at least a little bit over the next few days to come back. The picture that we're always using when we're explaining this concept is this of an elastic band, some kind of rubber band. You just take in your fingers and you start to stretch this band. And this is pretty much what price has been doing here. It's been moving away from this, from those price equilibrium levels. And once you let it go, it snaps back into place. And the structure of today's candle looks pretty bearish to me. How do I know it's a bearish candle? First thing, that candle is still going on. It's still printing. It's not done yet. And to base any trading decisions on this candle here right now would be definitely jumping the gun. It would be too early. We have to wait until this candle stops printing if we want to trade the daily chart. We are always basing our trading decisions on finished candles. Now, that one is still going. Let's assume it's done. At the end of the day, at the end of the session, it will look just like it does right now. Then this is a bearish candle, because the market tried to push higher. And let's make it even larger. The market tried to push higher, but in the end, it didn't work out. You see all this effort of the buyers, of the bulls, has been in vain. Bears, sellers have been able to drive price down pretty much to where the session opened today. And so, yes, there was strength, but in the end, the weakness introduced by the sellers definitely dominated that session. This is why we get this long upper shadow, this long upper wick. And so the idea that I'm getting here is, yes, gold is definitely here in an uptrend, but right now a pullback might be in time, might be taking place. Now, one thing I always like to use is I always like to use my Fibonacci retracements. I want to identify a potential area for price pullback. I'm just using the most recent swing point low, and I'm going to the most recent swing point high. And you can see that this level that has been tested now 3 times, and which we just broke out of, sits here just on top of the 50% retracement, very close coming together. This level starts to look rather interesting more and more. Let's pick the next one, and I could be doing this from here. And you see we're sitting here now in the area between the 38 and 50, but let's just move to the next one. And sure enough, the 38.2% retracement is sitting very close to the 50% retracement, sitting very close to this level again. So this makes this price level here of something like 1304, 1305, something like that, a rather interesting price level, and gives it some weight. The price might be pulling back to this level. So for my personal trading, I would be looking now for a pullback here to this moving average buy zone. And by the time the price will have pulled back to test this level, I'm pretty sure that our moving average buy zone will be quite close there. And once price is there and I get a small bullish candle setting up, then this would be our most typical idea for a potential trading opportunity. And again, even if I get the most perfect setup here, I don't know if this will be a potentially profitable trade or a losing trade. I never know. I just know that if I trade this kind of setup over and over and over again, and I execute my trades flawlessly, I don't try to bend the rules. I'm just going by the textbook style. I should be able to have put more profitable trades on my hand than losing trades. There will always be losing trades, but I should be able to score more often than not. And with the proper money management rules, I should also be able to have larger gains from those potentially profitable trades than from the other ones. And those two things coming together, that's an edge when it comes to my trading, and this is how I make my money as a professional trader. It's not about winning every trade, it's about winning more often than losing. Now, we're sitting here. I want to be trading now. We have seen what the big picture is telling us here. Why not have a look at lower time frames and see if something might be setting up there? And sure enough, those 8-hour, 4 hours, and 2-hour charts still show us this uptrend. But here, however, on the 15-minute chart and on the hourly chart, we start to see already that the trend here on the hourly chart starts to break out. And the 15-minute chart, sure enough, here is on a is already on a downtrend. You start to see that those moving averages start to set up for a downtrend, for a bearish move. And so the question is, how could this now be traded, potentially tradable here with Nadex contracts and options? Ishev, I hope I didn't butcher your name too much. Thank you for that question. The question was, how do you decide stop loss and target? I'm happy to answer that question in just a moment. Right now, I want to do a very quick look at how this could be here tradable with Nadex contracts, both to the long and the short side, depending on what your outlook is and what you think what the market might be doing next. I mentioned that on the daily chart we look overextended, and that on the 15-minute chart price started to look like the trend might be changing to a downtrend. Again, please note, the trend on the 15-minute chart starts to look like a downtrend. The daily chart, the weekly chart, all those look rather bullish, rather strong. The 8-hour, 4-hour, 2-hour charts, almost picture perfect uptrends. if I'm trying to trade this counter trend move now, the pullback to my moving average buy zone, please understand that this is rather aggressive and that this is not the standard approach for our trading. I'm just showing you guys this now for the sake of completeness and giving you a tradable setup here right now in gold. It's not a trade that I would personally put on. I always wait for a trend continuation setup because I just feel that this gives me a further edge and further allows me to stack the odds a little bit in my favor and essentially make sure that my win rate on those trades is a little bit higher. Bobby is asking about MACD and EMA as my main indicators, and let's just have a look again at this chart here. My main indicator, and it's not an indicator, my main thing to note is always price. I want to see what price is doing. I want to read price action. Now, my moving averages just help me to visualize and see certain aspects of price action quicker and faster. But in the end, everything, I will arrive at the same conclusions if I turn off all indicators and just look at price action. Those indicators just allow me to get those same ideas and arrive at the same conclusions a little bit faster. They help me with my scanning time. Now, this here is an EMA, could also be a simple moving average. I don't care, because in the end, it's just about, they help me to visualize those price equilibrium levels, those pullbacks here with my moving average buy or sell zone, and they help me to understand how mature that trend is and how long that trend has been going on. MACD and RSI, I'm just using those when I'm scanning for convergence or divergence. Essentially, I want to see if the trend has been going on for some time, if there are certain signs of weakness. And again, I should be able to see this by looking just at price action on its own. If some pullbacks are more extended than others, then usually that's a loss of momentum, and I would expect to see this as divergence both in MACD and RSI. Again, it's much easier to just look at MACD and RSI to scan for convergence or divergence than trying to figure this out by looking at price action on its own. But everything is in price action. It's just a second degree of confirmation. It's just the icing on the cake. Price action, it has always been and will always be king for my trading. Now, let's just quickly jump back here and let's have a look at how this could be tradable. We are looking here now at gold contracts, and we're looking at gold contracts which have about 71 more minutes time until they expire. And if I think that price might be going down, I could be looking now into trading, shorting, selling one of those contracts. And let's just, for the sake of completeness, have a look at this contract here. Why did I pick that contract? First thing, it's not a recommendation. I just picked this contract because I know this contract is a little bit in the money right now. We're trading with gold currently at 13.21, sorry, and the strike price here is 13.95. So it's in the money. It's not awfully deep in the money, but it's in the money. And if I was to sell, let's have a look here. First thing, I want to risk always about 1% of my account on any one given trade. And it's quite easy to adhere to those risk management principles and ideas when it comes here to Nadex contracts, because you immediately see what is my maximum loss on that trade and what is my maximum potential profit on that trade. And I can just, if I want to risk now 1% of 21,241 paper dollars would be around about 212. And so I'm just clicking those numbers up until I arrive at, I can trade 13 contracts for a maximum loss of $201. And that's pretty much here in line with my risk management. I'm just placing this order right now. Again, it's just for demonstrational purposes. It's not a recommendation. And David, I hope this is in line with what you have been asking. Could you show us how to enter and exit a contract? No problem at all. And you can see that I have just submitted that order. The order is now live, and I'm waiting now for either price to come down and hopefully expire below, or price to settle at expiry below the strike price, or I could try to actively manage this position. So I just have traded this contract now, and I have a position now on of 13 contracts, and I could now just try to establish a limit order, and I don't want to close this position now for 88.50, but if I think that price might be coming down to test the strike price, you can think of the price of those binary options always like the delta of a normal option. And this gives you a good idea that if price is trading around the strike price of that contract, that the price of that option should be not exactly just the rule of thumb, should be close to 50. So the idea here is once prices come down to maybe 50, I want to close around half of my position here. I can actively manage that position. I'm just placing this order now, and you can see that order has not been executed yet. It can't be executed because obviously I'm just willing to pay $50 while the current price is rather close to 87.50 on the ask side. This is how you could actively manage that position. You don't have, it's not fire and forget with Nadex contracts. You can always enter and exit and close those positions early on. Now, that would have been a potential trade here, and let's have a look at that trade once again. My maximum loss on that contract would be 18.75. My maximum potential profit, 81. That's round about a 4-to-1 profit reward to risk ratio, which is outstanding. For my own trading, I'm always trying to look for a 1-to-1, 2-to-1 reward to risk ratio. That one is 4-to-1. However, you have to keep in mind that the price can be also interpreted that the price will be above the strike price as a probability, round guesstimate, let's put it that way. And so if the price was 80 at that point in time, the probability that I could have a potentially winning trade on my hands here would just be the opposite, which would be around 20%. So I'm getting an outstanding reward to risk ratio here on that trade. But, and you see that trade has hit already, the 7 contracts have been closed, but that's not the main point here. I don't care if that trade is working or not. Again, it's just for demonstrational purposes here. And if we look at what price is doing, sure enough, you can see the price has started to come down at least a little bit furthermore. Now, reward to risk ratio and the probability that this is a potentially winning trade. You always have to balance those two together with the time until expiry. And so sure enough, if you get an outstanding reward to risk ratio, you always pay for it with a rather bad probability that it's going to work out, at least from a mathematical point of view, and the other way around. So always keep that in mind. You don't want to go for the extremes usually. Maybe that's your game, and that's perfectly fine. Personally, I want to balance things a little bit. I'm shooting for a 2-to-1, maybe 3-to-1 reward to risk ratio with a somewhat decent and realistic probability that it might be working out. And you can see here price briefly dumped to hit my order, and this is why it's so good to have those orders already in place and waiting there. Price came down, hit my order level, the order got executed, and sure enough, that spike is already over by now. And it doesn't matter. I closed the part of my trade. I pretty much took a lot of risk off the table. And this is how I like to manage my trades. All right. So if you think price is going up, you might be inclined to say, okay, wait a minute. I could be buying another contract. And again, maybe we should pick, let's go for the weekly contract. If you think price is going higher, and sure enough, here we have 3 days left. And now we pick something which is a little bit less aggressive. With the price 48.25 to 54, I know that this contract here is trading pretty much at the money. 13.95 compared with those other contracts that we have here, it's definitely 10 points difference. This one is pretty much at the money. And so I think the price might be going higher until expiry in 3 days. I might be inclined to buy this contract. But again, just to balance things, personally, I wouldn't have placed either of those trades. It's just here for the sake of demonstration to show you guys how easy it is to put on those trades and see also not only to put them on, but also to manage those trades while the markets are still running. David, yes, I'm pretty sure the session will be recorded and should be up and available at the usual outlets and sources in maybe 1 or 2 days. All right, so that's gold. I shared my idea that the market is going higher, but that a retest of this level here might not be out of the, completely coming out of the blue if it happens. Again, I don't have a crystal ball and I don't know what's going to happen next. So that's just my interpretation and my guess. Next thing, we had the conference in Jackson Hole of all the central bankers, and sure enough, after that conference, that meeting ended, Euro kept on pushing higher, went higher, and sure enough, we have seen new higher highs now. Now, it will be interesting to see what's going on to happen here next and how long this move to the upside will be here. You see this, I mentioned before that I should be able to see divergence setting up just by looking at price action. Please note the way that this move has happened here. We always had just very brief pullbacks, always very brief pullbacks. But now here, this was an extended pullback. And we had here one, and it was already a lower high and another lower high with lower lows. If you were quite strict here, you already would have been able to call this here the beginning of a downtrend. Sure enough, new higher highs, but this extended move to the right, to sideways with a slight trend to the downside. You see how much momentum was lost here, both in MACD and in RSI. And so if this is currently the new high and we get a pullback here, sure enough, we will have divergence setting up here in both MACD and RSI. This is the only way that I'm using MACD and RSI. I don't care about the histogram. I don't care about the trigger line. I don't care about overbought and oversold levels. That's the big picture that I'm using here. And yeah, you always also can see the moving averages have closed down. Another sign that that momentum has been lost and this move to the sideways, slight downside has been a little bit extended. Sure enough, they start to fan again, and I wouldn't be surprised if price kept on pushing higher, but this was already an early sign of weakness and fair chance that that we will see some kind of, yeah, let's say it, that Euro US dollar will catch its momentum and that this steep run up here might be slowing down a little bit. Let's put it that way. That's Euro against the US dollar, and I talked way too much with gold. Sorry about that, guys. Let's have a brief look here at what the big indices are doing, and sure enough, let's have a look here at the S&P 500. We start to see here lower lows and sure enough lower highs. We start to see that our moving averages have fallen back into place for a downtrend. And today's price action, yes, the candle itself is rather bullish. It's pretty bullish because this long shadow here to the upside, to the downside has been rejected. But overall, in the context, looks still pretty weak and pretty bearish to me. And we will have to wait and see what happens here next. My general assessment here on the S&P 500 would currently definitely be more to the bearish side. The Russell, absolutely bearish case here. We see those pullbacks. Where do they go to? They go to a moving average sell zone, and price continues to go lower. The structure of those candles has been bullish here. It's not a setup candle for a potential short trade, at least not according to our rules. Your rules might be completely different. But there wasn't a trading opportunity here. But overall, I would be looking now for a small bearish candle to trigger a potential short entry. And let's go to the Nasdaq here to just complete the picture. Nasdaq still is holding up pretty well. Sure enough, we see also here those lower highs and slightly lower lows. Overall, this looks more like some kind of sideways market with some kind of triangle pattern setting up here. I don't like those triangle patterns. I always try to use those flat horizontal lines of support and resistance. They're way more precise and allow me to really create and use better entries and potential setups here. All right, guys, that pretty much completes our quick walkthrough through the markets for this week. I hope you liked today's session. I hope you also saw how easy it was not only to open positions at Nadex, but also to manage them and also to apply proper risk management and position sizing. You saw I just simple calculation, 1% of my account size, and I just kept on clicking on the contracts until the maximum loss, which is always shown on the order ticket, was in line with my 1% rule. And it's so easy to apply proper position sizing here. Obviously, you want to have a complete trading strategy. Entry is a part of that strategy. Exit, very important, but also proper risk management, proper position sizing. So always keep that in mind when it comes to trading. If you haven't already signed up for your Nadex account, for your Nadex membership, have a look here at that slide and make sure to sign up for a demo account. If there are any questions considering Nadex, multiple ways to be in touch with the good guys at Nadex, and they're more than happy to answer your questions once you are in touch with them. Bobby, thank you very much for the feedback. Really appreciate it. I really do. That's not just me saying that. So thank you very much for that. Yeah, guys, that's the end for today. I hope you enjoyed it. There was something new and something useful for you. And yeah, as usual, after this webinar, there should be a short survey. Any feedback that you do have for us to help us to improve those sessions is really always welcome and much appreciated. So once again, it's been a pleasure for me. Thank you very much for attending and some really great feedback and questions today. Thank you very much for that. And now to all of you, have a great day. Happy trading. Catch you next time. Take care. Thanks again and bye-bye.